me the update.
So, what's the update?
I'm not sure if the last time that I did an update, we talked about how the market has shifted since the beginning of the year, but the first quarter into the end of March, we saw a really hot market.
Damn, that's hot!
Where there was very few properties for sale. There was a lot of buyer aggressiveness with those offers and home selling over asking. Very typical for the first quarter of any year. Inventory is at its absolute lowest January through March.
Beverly, we're out of stock.
Sometimes that hot market bleeds into April, May, and even to June. But the last couple of years, it's really stopped somewhere in mid-March. Sellers, agents, buyers don't feel that shift right away when it's happening. Kind of have to be involved in a number of deals in order to start feeling the impact of it early.
I can't feel it.
Certainly by the end of March or early April, everybody knew this was happening, especially into your average 3-bedroom, 4-bedroom, 2-bath type of neighborhoods where I sell a lot of homes in Blossom Valley. There's a lot of uncertainty around the economy. Stock market has been up, the stock market's been down, the price of fuel, overall inflation that we've been dealing with for a few years here.
Can I get a break?
At the same time, inventory is increasing like it tends to do this time of year. Plus, interest rates actually had gone down, gave a lot of people a lot of hope that they were going to even go down further. And in reality, they actually bounced back up a little bit. And I just think all that kind of made buyers a little more leery. And as a result, their activity, their aggression on those offers became less. It really slowed things down quite a bit.
He moves like a snail.
To the point where many houses were taking 3 weeks, a month, or even longer to sell, especially those that went into the market thinking as a seller they had the upper hand. Buyers, they're no longer buying based on excitement and hype and competition as much as they are looking for a property where they can feel very good about their purchase.
Kick the tires, so to speak.
They're looking for certainty, a level of assuredness that the offer that they're making is a good price for the house, even I'd say a good deal, and be able to defend their purchase if a friend or a family member asks them, why'd you pay that much and why'd you buy this house? Going into a market like that, as a seller, your job no longer is to sell the hype.
Do too much.
Push that competition to its maximum breaking point. What you'll find is that buyers won't go to that breaking point. They'll actually leave the conversation first. How do you win as a seller? Number one, you need to eliminate all uncertainty from your property.
You've got to accentuate the positive.
The best way to do that is do your inspections up front and actually go through and repair, fix, address every single item on that inspection so that when a buyer is looking at your house, they know exactly what they're getting themselves into. All uncertainty, all objections have been addressed. Cosmetics are great, granite countertops, quartz countertops, beautiful cabinets, flooring, but what's under the hood is as important or more important right now. It's almost a flip of the hype market, whereas cosmetics really saved the day. Number two, you have to be realistic about your expectations from price.
It's not a fantasy.
Most of the time, you will not be able to see real-time comparable sales from what's happening in the market today because it takes 21 to 30 days for a transaction to close. When you're looking at the houses that have recently sold in your neighborhood, they probably transacted March or early April and we're probably looking at a lower price. For a rule of thumb, 3%, 5% might be a realistic expectation of your maximum price. This is not a one-size-fits-all. Some neighborhoods it's less, some neighborhoods it's more, and in some neighborhoods there's no change at all.
Anyway, long story short,
You need to calibrate your expectations. 3 to 5% is a good rule of thumb. And then you need to price the house 10% below that number because what'll end up happening then, you have a realistic expectation in your mind of what the sale price should be.
$1 billion.
Buyers will then do their own discovery, see that the comps are a little bit higher than that, which will make yours look like a good deal. Then you're 10% below that, which will then do an even more important thing, which will signal to those buyers that your house won't be there next week.
Limited time offer.
If they want it, they're gonna have to act now. If you were to list your property at the value of the comps, every buyer's gonna look at it, they're gonna say, oh, that's a great house. It'll be here in 2 or 3 weeks, I'll circle back to it. And by that time, they're gonna say, oh, it's been on the market 2 or 3 weeks. I bet you there's something wrong with it. Or they're gonna say, I bet you I can get it for less. You let them shift all the leverage into their side of the table. So as a seller, you do the 10% below market value strategy. They think it's not gonna be here. If I want it, I better go after it. And then they bring in an offer at that market value. You will be able to not only close quicker, but get a better sale price. I know this from experience.
You know this, man!
Within the last 4 weeks, I've sold 5 properties and every single one of them was treated exactly like I just said. And every single one of them received multiple offers and sold at the price that we expected. Whereas many other houses in those same neighborhoods have been sitting on the market for 6 weeks.
That's a long time.
at prices just a hair lower than the sale prices we're closing at. So if you want to get your house sold, follow this strategy, and I think you're going to be doing okay. Buyers, keep doing what you're doing. It's working.
I think there's a way we can all win here.